Hi everyone, thank you for joining me for part 3 of our tax education series. Today's program is going to be focused on settling your tax debt through collection alternatives. As you're all probably very familiar with, my name is Zara and I'm the staff attorney working at the Taxpayer Clinic with the Volunteer Lawyers Project. So without further ado, let's get into it. Okay, so our discussion is going to begin today about just going over some important dates and what they mean in the tax collection process. We're then going to talk about collection alternatives. There's 3 that we're going to focus on today. The first is currently not collectible status. The second is an installment agreement, and the third is an offer in compromise. I have reserved the final portion of the presentation for questions, but please feel free to send questions throughout the presentation. I'm more than happy to address them. Okay, so the first very important deadline is the tax filing deadline. Usually the tax filing deadline, it's typically on April 15th, but as we know, due to the COVID pandemic, the IRS did extend that this year until July 15th. In regular times, if April 15th does fall on a weekend or a holiday, it'll be pushed off to the next business day. And the reason the tax filing deadline is very important because it really starts a lot of the other it holds a lot of implications for the other deadlines. So it is important to timely file because you definitely want to avoid penalties and interest. But also down the road, if you do end up having a tax liability, the tax filing deadline becomes very important. So as it states below, it's important because it begins, it affects the assessment statute end date as well as the collection statute end date. And I'm going to explain both of those deadlines in more detail. Okay. So in order to understand what an assessment statute end date, it's important to first understand what an assessment is. So an assessment of tax is a determination of the amount of the tax owed. So essentially what an assessment does is it puts the liability on the books, and just really the IRS operates just like any other creditor. So an assessment just puts the tax liability on the books. Usually, even when taxpayers file their tax return, that in and of itself is an assessment. But the IRS does have 3 years to assess an additional tax liability. And that's really based on the information that they receive from other parties. And if there's something that triggers an audit, they have 3 years to bring any claims for an assessment of additional tax. Now, it's important to note that 3 years starts after the taxpayer has filed the tax return, and there's a small distinction there. So if the taxpayer files their tax return before the deadline, so before April 15th, then the IRS has 3 years from the April 15th deadline. If the taxpayer does not timely file, then it will be 3 years after whatever date they did file. And as long as the IRS brings the assessment of additional tax within that 3 years, then the assessment is valid. On the other side of that, if the IRS makes an assessment beyond that 3 years, the assessment is void, and that's one way that we can really attack the validity of the claim, and it might be one avenue for relief. So it's just important to be aware of that. The second very important deadline is the collection statute end date. So the collection statute end date is 10 years after the assessment date. So technically speaking, the IRS has 13 years altogether to collect, but that's only if the IRS took the full 3 years. But if they assessed before, let's say in year 2, then they have from year 2 and then 10 years out from there to collect on the tax liability. If they're not able to collect on the tax debt within that 10-year period, the liability becomes uncollectible. It is important to note that the IRS may take judicial action to seek an extension of the collection period. So if the IRS believes that the taxpayer has assets or is able to pay, or if there's a policy reason to extend that deadline, then the IRS may seek judicial action to have that collection period extended. But generally, the collection period is 10 years. I do want to note, because we're in New York State is a little bit longer. It's actually double. So New York State Department of Taxation has a 20-year collection statute of limitations. So that's just something to be aware of, because it is a big consideration in what collection alternative is the most suitable. Um, so that brings me to collection alternatives. A lot of times taxpayers are unable to find themselves unable to pay the tax liability that they owe. This year is no exception, especially with COVID-19. I do want to reiterate that if you did receive unemployment compensation, that is taxable. Not great news, but the good news is that there may be collection alternatives that you would qualify for. So, as I mentioned, depending on the assessment date, the collection date, we can assess what collection alternative would be best. I do also want to mention one thing with the assessment date and the collection statute end date. If the taxpayer did not file a tax return, or if there was fraud, or I believe, and the third one is, I believe, if there was a gross misstatement of income, then the IRS is not bound by those deadlines. So just try to file your taxes timely, or if not timely, just try to get them filed if you do have an obligation, because then at least there's some cutoff date that might be helpful in some circumstances. Okay, so sorry, I diverge. But back to collection alternatives. So the first one is currently not collectible status. And what that does essentially is it stops collection activities. So this is important if your wages are being garnished, if your Social Security or SSDI, if a portion of that is being applied to your outstanding tax debt. And if you're in a difficult financial situation, there is one avenue to stop collection activities, and that's by seeking currently not collectible status. You can seek this status if you would be eligible for the status if your basic living expenses exceed your income, and you fill out Form 433F. It's a financial disclosure form, and on that basis, you can request that your account be put into currently not collectible status. Now, it's important to note that the amount remains due and it continues to accrue penalties and interest. Also, if you're entitled to any federal refund, it will be applied to the past due amount. Now, this is important because one of the requirements in order to be eligible for currently not collectible status is also that you have to be in filing compliance. And so if you have a filing obligation and you don't file, that could potentially take you out of currently not collectible status. The interesting thing about this status is that it does not toll the collection statute end date. So you could be, in theory, in currently not collectible status for the full 10-year period, and then ultimately the tax debt would fall off of the books. So that might be the first and final step for some clients. Typically, what we do in our clinic is we try to put all of our clients into currently not collectible status if they're eligible, just while we can navigate a path that best suits their situation. But if somebody comes, in their 8th or 9th year after assessment, currently not collectible status might be more suitable for somebody in that situation. Other factors that we consider is if there's going to be an increase in income, we might want to settle everything through an offer at that point, because we don't want it to be hanging over their head. The next option would be an installment agreement. So an installment agreement essentially is an agreement with the IRS to pay a smaller amount over a period of time. If you find that you're able to pay some amount but not the full amount, this might be a better option. Now, one thing to note with an installment agreement is sometimes the IRS will request an extension of the collection statute end date, which you can enter into, but that might be a condition for installment agreements. But again, it's really a facts and circumstances analysis. Could be a good option for some people. And the final option, is my personal favorite, is an offer and compromise. The offer and compromise is essentially a settlement of a tax debt for less than what is owed. The factors that the IRS considers is the taxpayer's ability to pay, their income, asset equity, and their basic living expenses. With regards to asset equity, it's important to note that the IRS also considers how fast the assets can be liquidated into money. So if you do own your if your home is owned, but let's say the value is not, the value in comparison to the tax debt might be very close. And if it's your primary residence, there's an argument to be made that yes, you do have an asset, but it would be very difficult to turn that asset into cash money. And so there's a lot of arguments to be made. Again, it is a facts and circumstances analysis. So that's really the collection alternatives. I did also, so I did not put this on our agenda, but I did also want to mention some resources for tax filing. I know that the tax season is quickly approaching, and come January 15th, I know a lot of people are going to, especially with COVID, a lot of people are trying to find tax filing resources. So the VITA program is a great resource. They usually, pre-COVID times, are operating between January 15th to April 15th. I know that last year there was a lot of confusion because of all of the executive orders and the stay-at-home orders. However, I think it's safe to say at this point that the infrastructure is in place. So we do anticipate that VITA will be operating, whether that be remotely, on a drive-through structure. I know that most of the VITA sites should be opening or should be operating this coming tax season. There's also tax counseling for the elderly. And also, if you go onto the IRS website, there are some do-it-yourself tax preparation tools. So if you feel comfortable using those, that's definitely a great resource. But yeah, that's about it for today. Does anybody have any questions? Okay, thank you so much. If something does come up, please feel free to contact our office. So that phone number is my direct line. You can also feel free to email me. Our address is also posted, but I will say that we're still operating remotely. But if there's any mail or anything that you want to send, you can send it to that address. We have recently also set up a web submission form. So if you go to our website, ecbavlp.com, and I believe if you go under services and the low income taxpayer clinic, you should see the option to submit your query online, and then you should get a call back from us between 24 to 48 hours. So thank you so much for joining me today, and I hope that you had some benefit from this presentation.